Shit. Hello, everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacino. How is everyone doing? Hello, Sashi. Yes, what a day. We had the bottom patterns trigger this morning. They followed through. Hey, waka waka. I didn't think today was that messy. We had the decent pullback after some targets hit and then kept on rallying. I mean, I thought it was a pretty strong day. Hello. Looking for the next drop. Had enough of the pump data. Data was bad. Yeah, but you remember, this is what you also get in bear markets. Now, we do have potential reverse signals going back down, so we'll have to see. But again, they don't have to trigger. You didn't think, I agree with you, Christoph. I did not think it was messy. And again, I hope you have had a wonderful Friday evening over in Europe. Good afternoon, George. Hello, hello, Wavy. What an end to the week. Fine afternoon to Mike and crew. Thank you very much, Renzafall. Woke up deep red, but clawed my way out of the hole. Well, that's good. Glad you traded your way out of the hole. This is quite the fake rally. Well, every rally in a bear market is not a fake rally. It's just a rally. It's a counter trend. It's a counter trend rally. Just like in a strong bull market, the pullbacks are counter trend dips. And you got to be prepared for these because they do happen. No matter how bad the data is. I mean, look at all the junk. Look at all the junk how much do we have coin? And, it was not unexpected, but look at how much ARK is up. Look at how much things like Coinbase and were they oversold? Yeah, but we're not, this is fantastic because when I see junk like this pop absurdly over 2 days, we're not done. We're not done. Once people start giving up on that crap, then we're going to be closer to a bottom. Thank you, Michael. I mean, I took some of that afternoon off. We just got delivered 10 cubic yards of mulch. Have to get it spread before tomorrow morning, and so I was doing some of that this afternoon. Got about 8 done at this point. I am absolutely beat. So if you're wondering why I'm sweating and glistening and my head might be a little red, that's what's going on. I did wear suntan lotion, though. Yeah, hood. I mean, you see these. It's. And I've talked to people. They were all rushing back into the junk. I'm buying ARK. Why? Because ARK has got to go up. It's going to go back over 100. And there was short covering. Yeah, and then we're going to get another rollover play. So, when I start hearing people, I'm still buying ARK. It's going back to 100 easily in the next couple months. We're not at the bottom. But you got to be prepared for the rallies. Yeah, some went up 20 to 30%. Okay, it's what happens. Now, once we start getting some bounces in more sensible stocks out of oversold conditions, and we did get some bounces in some stocks, but then you'll start, those are the rallies that tend to have a little more legs in a bear market. By the way, consumer sentiment preliminary came in absolutely horrible. What happened to my numbers? Where'd my numbers go? They stole my numbers! 59.1. That was absolutely miserable, and inflation expectations at 5.4. These numbers were miserable. And then we had cash and carry speaking, which, and you see the rig counts going up slightly. So very interesting. Here's your heat map. Again, green for the most part across the board. Your mega caps, a decent rally in those, but then a massive rally in junk. Nice rally in energy. There was pretty much just the rally out of really oversold conditions. FOMC still we're at the 50 basis point. I'm surprised this isn't inching up a bit more. And remember, negative gamma. Negative gamma, guys. Up and down. So don't be surprised because these rallies feed on themselves. They feed on themselves. So S&P. I mean, this was fantastic price action today. So remember I talked about that little pullback. Got that on the open. Little right down in this area. And, sorry, wrong little thing. Here was the little pullback on the open and then the rally up. Pausing at the second target, spiking up, and this is when I started dealing with mulch. So there was no more for me. Now for what happened to my reversal patterns? I had these on. I'm just going off of here. We'll cover these more on Sunday. Again, I thank you for being here. So, I mean, this would have to trigger 39.75.75. So we do have a potential topping pattern now. So that's going to be interesting. I'd probably go over the off the conservative targets, but we don't necessarily have that top in place, which would take us back for, I'll leave it on there with the 62.5. So that could easily pull us back to here. Where is my line there? Yep, it's just making sure it's at the right place. That could easily pull us back to the 62.5 and still not close below it and still head up again. Just watching where the levels say and the probabilities. So that's what I'm keeping an eye on. Again, we will review this more in depth on Sunday. Nasdaq, that little pop right down on the open. Super, like boom, boom. Right to that area I talked about watching. That's the thing I was focused on the open. Stalling out at that first target. Then not quite to second target, but there's a double on this. So the double on this wouldn't even take it back to the 62.5, and the second target's right to the 50% level. The trigger on there would be 12,218. So we'll cover that more on Sunday, but just wanted to point it out in case somebody can't join on Sunday. Or again, I really appreciate everything being here. On a continued rally, though, in the next week, we do have some more potential upside price action, and this does not have to trigger. Dow also. Potential double top. We'll just use this. I'll work on fine-tuning these again after my mulch spreading's done. First target's right in front of the 62.5 level. But if the Dow does keep rallying, let's just take a look at this on a daily chart. I'd just be watching the daily rotation zone. Jumping back to the Nasdaq, you see here, right to that daily rotation zone. And the S&P, right to the daily rotation zone. Now, generally, we get a slight pause and a pullback, and then if it breaks again into the daily rotation zone, I would target the 50 and the 62.5 levels, especially the 62.5, which would be the breakdown level from this last little decline. So that would be on the continued bullish move up here. Russell bounced back to prior harmonic just in the rotation zone, but then closing below it. So not much to talk about there. DAX rallying to the upper end of this channel. So if it does continue on a poke through on Monday, I'm watching 14,160 upper end of the channel and the 50 before another rollover play. Crude, nice strong move up here. Going into next week, I'm watching 111.40 for very key. It's got that close in the 4 hour above the 62.5, hit the 87.5. I'm watching for the full targets. Oops. Then I'm targeting 113.68. Then the major move, 115.74 to 116.41 to see if it does close above 116.41. We'll take a look at some pullbacks. Gold bouncing back a little, but still we need a stronger bottoming pattern than that. Silver, nice little reversal. Now I'm starting to watch to see how we roll over and how we'll hold these bottom lows. But the critical thing is, and I said we check in on this, actually issuing a long-term sell signal today on the thing. So I have to be very patient with silver. Notes, slight little pullback, but still going to watch for a continued rally next week. What would invalidate that for me? At this point, I'm just going to put up the reverse harmonics. And we need a close back below about 118.10. Dollar index, pretty much a pause day. Little minor double top here. So we're going to see if it is triggered on the 1 hour basis. So I'm going to be watching to see if the dollar index continues a little bigger pullback. VIX, then I'll take a look at some comments. VIX just dropping back down. Watching this reverse back down. So based off of this little action on reversing these, look at this, closing right at the 62.5. Was wanting it to actually close below it. So, because then I could easily target this. So this leaves us in a hanging state. And by the way, we did have this little double top pattern. So you did have, that's the only thing from the continued pullback in the VIX. Not yet to that first target, but that would easily take us back second and possibly third target. So 27.64 and 26.58. So based off the VIX, do we have more upside room to run? Even if we get a little pullback on Monday and then another push lower on the VIX, it's completely still in sync with that double. Let's see where we are. Let's see. I'm just looking. Yeah, mulch spreading, great birthday activity. Tell me about it. Tell me about it. But we've had a horrible wet and rainy spring, and now it's hit the 90s. So I'm spreading mulch in humid and 90-degree weather because it's the only chance I've had. For my birthday weekend, yes. That's a fantastic thing to be doing on your birthday weekend. Isn't that what everybody does on their birthday weekend? I've got my 8 yards, oddly enough, of mulch arriving next week. Well, you'll have fun spreading like I did. Apple's still off 10 points from the 200-day. They killed the market for weeks in a row to give us a small pop, and then all of a sudden everyone is mega bullish. Guys, this is what happens. This is what happens. This is why you talk about the rip your face off rallies. And look, Apple, it's still not even back to major support. It's not even back to its daily rotation zone. Could this have more room to run? Yes, easily. This is what happens. I've lived through so many of these at this point. So many. And it does. It's like when I first started experiencing bear market rallies, I'm like, this makes no sense. It makes no sense. What are people thinking? Then you just learn to go with it because you can make money with it. You just got to keep things in perspective. But the rallies are generally shorter lived. There can be some longer ones, but they're generally shorter lived and they're very aggressive. Yeah, it's just, Powell, I don't know if we'll have a soft landing. Let's rally the market. Guy, it's the way it works. Bear rallies in negative gamma territory are self-feeders, cannibalistic. That's right. That's why I keep pointing out. There's a reason I keep harping when we're in negative gamma. Because it amplifies both the upside and the downside. And with the hedging that goes on in bear markets, because you have these put positions that are put on by institutions, you get into these negative gamma situations. And I'm just trying to teach people things, especially if this is through, and COVID you can't even count as a real bear market because there was just, all right, we dumped and then we had like Fed step in with super easy monetary policy and we got a V-shaped reversal. So it was like in a bear market for 10 minutes, that kind of thing. This is going to be more of a sustained bear market like we saw back 2008, 2009, and back at the end of the dot-com boom. So go study those kind of price action and charts for your clues about how it could act. Regarding the gamma, the neutral gamma lowers over time, right? So we would have some consolidation, then we would have a chance to naturally get back to neutral gamma. Well, you have gamma unwind, you have gamma change, let me put it that way, as it gets closer to expiration, but it also depends on the put and the call gamma, all right? That's why I keep stressing this, and I have not, literally, I don't have time to do I rely on other people to crunch the numbers now. But if you look here, you can start to see the put gamma is way more than the call gamma, but you still, where are we sitting? 40.23. Next week, we have a lot going to roll off at this 4,000 expiration. So as we approach, it will change. Your gamma curve will change, especially next week. All right? But this line is going to change, is going to start changing as we get into it next week, depending on, and I'd have to work out the math with as we get closer with the expiration, which, where we're sitting, which gamma is rolling off faster. So I just like to watch the lines at this point because I literally don't have time to do all those calculations, all that math. But yes, it does change. Now, what happens at option expiration next week for the monthlies is we get new positions reestablished. So we'll get a whole new gamma curve. It won't be much different, but it will be different. Just shows we need 500 basis points from Fed and 95 drop in Nasdaq to make sure bulls are dead. How would you want 10, 50 basis points hikes, waka? Once Fed funds reaches 3%, there will be no survivors. Apple dead, Tesla dead, Nasdaq dead. And think about this. You got to analyze what happens with stuff once we start hitting short-term rates approaching 3%, because you can roll into risk-free or generally risk-free assets for a 3% versus risk aspects that don't even have to return that in a bear market. So it will get interesting. We shall see. So much money needs to be killed, and that's why it's going to be a long-term bleed out from my perspective. And again, once you see people rolling over and starting to just say, I'm never looking at you or at coin or at hood or at that or whatever the next one is again, then we'll know we're closer. You are welcome, Christoph. I'll do more of the DAX on Sunday. Sorry, I'm just tired. Also, the Tesla call buyers are back. May see some gamma juice next week in the OpX. Big call sweepers in the tape all day long. Yeah, Tesla. But also Tesla oversold. Not even back to the daily rotation zone yet. So could this still run up even into the weeklies, even back to this even into the daily rotation zone, even up towards this breakdown area easily? But then again, there's still going to be the news and Elon plays and what the hell is he doing with Twitter and this and that and the other thing. And who knows? I'm so tired of hearing about, oh, you know, this market will also be dead when I don't have to hear about Elon literally every day. Here's Elon's thoughts on flower arranging. Like I see headlines go by like that and I'm like, can we believe he's done? He's got credibility on like flower arranging because of Tesla stock and because now he wants to buy Twitter, but he again complains about bots, which one of the things is to pump up his friggin' stock or the amount of bots promoting his stock. Hello? Oh, see what's going to happen? News-driven call buying bulls. So we will see. Let's just take a look at Tesla on a shorter-term basis. There's just not a great pattern here. I have still my gap harmonics up here. I'm still watching. If we close below essentially 750 on a 15-minute basis, I'll start watching for the gap fill. Other than that, it would be a potential breakout play on Monday. Yeah, we've had cloudy. We've had one of the. It's in the top 3 cloudiest springs since they started records back in 1800s. I think this is the 3rd cloudiest spring we've had. And mulch gets delivered, full-blown sun. Not a cloud in the sky. Go figure. Are you living on the countryside? We have a very big yard because of all the dogs. A huge fenced yard with I might take a picture when we're done. A nice gazebo area. I'm putting in cedar mulch in the pathways. You know, because we have these walking paths. I like to put cedar mulch in because it keeps the bugs away. We're surrounded by forest. I'll take a picture and put it up for Sunday once it's done. Thank you for asking, Christoph. But I'm in a northern suburb of Chicago. But there is, again, we've got spread out properties where I live. It's not packed in, and I back up to a forest preserve area. Monday, reports on big holding for Kathy, the Oracle of La La Land. How would you create targets for this? No PE below IPO price. Thanks in advance. I have not looked at this. Monday.co. We'll see. How would I create? Well, let's just take a look. Let's first do the little short term. So if it were to pop up, the next target would be 126.25. I'm not even going to bother with the longer term stuff because that takes it back to the daily rotation zone and just above this major resistance and below this major support becoming resistance shelf. How would I do targets for downside now, since I'd be more interested in this rolling over? Although we're in stupid market, so could we still get another pop on Monday even if they miss earnings? You could in stupid market. Here's the targets for downside, 73.90, 60.76. I'd use those targets. And then you have to use your insane targets because longer term. I just want to see where this one is from this nice, yeah, there we go. Oops, yeah, I got it. And why'd I go back there instead of here? Because this was a really big pausing area. So this gives me a harmonic cluster 7390 to 7093. Minor 6076, and then I bet you we hit this before this bear market's over, 2881. And there we go. Here's your P to E ratio. No. But we have the rip your face off rally. How much is that up? I'm curious. It was up to the close. See, 26% in 2 days. But look at this last stupid crazy rally. What? 1, 2, 3, 4, 5, 6. How much was this low to high? I'm just curious again. Low to high. It was 70% rally. So don't be surprised at this crap. This is what happens. So there's your targets. Options 22. It's time to just set back and take it from the pro crew members. And I'm just trying to share knowledge with and to help you guys so you'll have a long trading and investing career. And you got to learn to rely on the statistics. Is everything always correct? No, which is why we use stops. But once you start to learn to use the patterns and the numbers, you're going to be way right more than you are wrong. And if you limit your losses and keep good reward to risk ratios, you're going to come out way ahead. And yeah, you can go, this rally's stupid, but you still got to play the statistics. You got to play the odds. You got to play the patterns. Else you'll drive yourself crazy. You'll literally drive yourself crazy. Is it still valid to have made all my money today by shorting Tesla? No, it's completely valid. There were shorts. You just have to be picky. Again, long term, shorts are great in Tesla. You just got to be picky with where you put on your positions in these rip your face off rallies. You got to be picky. And if you do your levels at the right places, you align your probabilities. Apple weekly double top or too sloppy? Apple weekly. It's a little sloppy, but I would put on my price targets. And it did trigger on the weekly basis, which is roughly what I was waiting for. And I did spot that earlier. What I'm watching for now, I target here. I'd be targeting closer back. If we do on a continued rally above this 150, even on a return to this 157 with the rolling over rotation zone, I'd be looking for, longer term, definitely Apple is a major short for me. We're through those harmonics. So here would be your targets: 135.34, 127.97, 120.59. And longer term, I'm expecting Apple to get back down to at least 100. But remember, you can get these pretty substantial rallies. You can look at that last rally. Look at this last big two-week rally. Let's do low to high, just to 20%, 19.6%. I'll be accurate. 19.6. Where would 19.6 from this low to high? And I'm not expecting that to be the exact area, but I just want to get an idea. Look, 19 point. That's close enough. I don't expect it to get that high, but I'd be targeting, first area would be the 157, and then the upper end of the rotation zone, 162. But that would be, even if we came back down with this, let's just say we go to the bottom of the weekly rotation zone. Look, 15% rally. Is that completely possible with not invalidating this massive double at all? Yes. Mike, I know you don't like the stock, but I placed a double bottom on SoFi, took profits when it touched the exact target. Seeing a gap fill on the downside now. What do we watch for on those? Thanks. I don't have a problem with you playing stocks. I don't even have a problem with somebody playing a Coinbase or you. Why I say you got to be nimble. So this, you have to be nimble. And if you're sticking with a pattern, all right, if you're sticking with a pattern, that it's this to this. If you're sticking with this pattern, and you want to play something intraday, there I have no problem with it. Would I be in SoFi for a long-term hold? Not at this point. Can you play these things? Sure, you can play. Look, you can play GameStop. You can play AMC. I have no problem. Are they long-term? You want to put all your money in there and hold it with diamond hands or whatever it is? No, not on your life. That's the stupidest thing I've ever heard. Can this still have room to run to the upside? Sure, look, spike bottom, weekly cycles turning up out of major oversold condition with some divergences. Could it easily rally back? If we get even a monster rally in the Nasdaq, could this thing hit 840? Yes. For your gap play, at this point, now you're going to have to raise these levels. If it makes a new high, you have to keep raising this, and you watch for that close. And based off this price action, I at least want to close on a 15-minute. An hour would be preferable. So right now, that would be 612. Let's say it rallied Monday up to here. Then your level would be 624. So you're going to keep upping that as the rally. And then once it closes, you play for the gap fill. And if you get another, like let's say you get a double top pattern on this rally, you can even play that before the gap fill. So again, Josh, I have no problem with people playing this stuff. Just put it into perspective. Okay? Because I don't want people to get burned long term with this. Like, I mean, look at coin. I mean, what percentage rally do we have off this thing? This will roll over again at some point. But an 81% rally, you're telling me in 3 days or 2 days, this stock it's now 81% better? No, but we had the gap here. Look, it filled the gap and created another gap. It's not even back to its daily rotation zone. 381 companies in New York Stock Exchange and Nasdaq were trading below cash on hand this week. Yeah, things get overdone. But that's off their last earnings report. You don't know what cash unless it's way below cash on hand. Also, the market is discounting stuff. So if we start getting into a recession, companies tend to burn more cash, especially if money's more expensive and they don't want to borrow at more expensive rates. So keep that in mind. Not saying that's not look, we got very oversold. Thank you, Josh, for that super chat. Thank you. I will enjoy my birthday weekend once I am done spreading mulch. Elon loves being in the spotlight. I don't think he leaves until he's dead. Thank you, Lauren, for the super chat. Again, I really appreciate you guys with the super chats. It keeps the channel going. Thanks for all you do. Happy birthday. Thank you very much, Lauren. I really appreciate it. I blame it on Jimmy started sharing everything, so everything pumped up, just waiting for him to go positive now. Yeah, he'll watch. We'll get through a rally, and then somebody just tell me when he goes, the bull market started again, because that's when we start watching for our major shorts again. What one to two entry levels would you be looking for on a new CRM short? I'd be watching mine, or I'd be watching 169. I would not short this until we start getting some rollover moves, though. But anywhere between 170, 171 to 174. And then because why? Then I could keep a tight stop because you get a close above 170, this 62 and a half, this 174.02. Then we'd be getting the bigger pullback. If you wanted the bigger pullback, then I'd be watching your next levels. If you wanted to wait and be more patient, then I'd be watching more closer to the 189 to about 196 area. Why that? Because that's off this sell-off between the 50 and the 62 and a half. You have the declining rotation zone. You have this prior breakdown area in the weekly rotation zone. Okay, I'd probably be a little more patient with this if we get the continuing rally next week, because you got cycles turning up on the weekly, but you have major overhead resistance here. So we start getting back to this breakdown zone, the flattening 200 into the rotation zone on a weekly basis, definitely an area I'd be watching to reestablish shorts. Again, we might just get a short little pullback. I'm still leaning towards the more upside next week, even if we get a little pullback. And even if these doubles trigger, we could just get a small little pullback and then a continued rally. If we were talking puts on that stock, well, it might be, you might get the downside with that play. So I'll keep my fingers crossed for you. You bought it because it's one of Kathy's faves. Does everyone really think the rally will last longer than one day? So far, they didn't hit all my final targets. Again, we can't. You're going to get more than one day rallies in a bear market. So don't get so bearish, Waka Waka. I know you're super bearish, but don't get so bearish you get blinded to any potential upside price action. Take it from me, I am not bullish long term on this market. 1100 to 1200 might be the floor for the Nasdaq. What do you think? I think we're going longer term. We hit that 52 level. The next down push, I'm watching 10.4. And then I will assess once we hit there. But no, I don't think the bottom's in for the market. We might have a short-term bottom in, but not a long-term bottom at that level. Thoughts on NIO? Thoughts on NIO? You're probably going to get another pop. I'd just be watching. Now we closed below the 62.5, so I'm watching longer term for us to hit 943 at least. You do have a little potential double on a weekly basis. Would be shocked if it triggered, but there it is, above 23.98, 23.47, 20.32, and 34.95 on a short-term play. If a continued bounce, let me take a look at this daily. You're right back to the bottom of the rotation zone. You still have an unfilled gap up here, so very short term, that's what I'd be targeting. And then the next level on a continued rally with PEs companies that don't make money yet, possible to 1636. There's your longer term play, which I'd be shocked if it triggered, but my short term area would be 1636 and then to about 1767, and I wouldn't push things much farther than about 1767 without some really strong price action because you're going against the weekly rotation zone. Thank you, Davey, for the birthday wishes. Again, it's technically Sunday, so you can always come back on Sunday and wish me a happy birthday too. Waka waka. Floor on Nasdaq is 2,000 for me when all said is done. Well, we shall see, Waka waka. Well, you really want the carnage. Thank you. I'm glad you think it's an amazing community. People want to be the best traders ever. I'm glad I could do that for you. And thank you. Can you take a look at end phase? And thank you for punching in the symbols, especially if I do have a little moment and forget it. I really forget. End phase above this 160.50 area, I'd still be targeting this gap fill. So on a continued rally beginning next week, I just target this gap fill. Would not get really short-term bullish until it could get a close above roughly 169. And then I target the flat 200. Coming off virtually off the next harmonic area with this little bounce. So again, cycles are at the bottom on the daily and the weekly. So you could see a little continued price action in here up. It's still caught in consolidation. So it would just be a consolidation bounce play. If you can't get above that 62.5 and you get here, then I'd watch for that rollover play. Hold on, I gotta take a sip of. I'm thirsty. It's been quite a roller coaster in a week. With that, hope everyone can recharge with OPEX next week. We may see some increased volatility. I don't think you can get more volatile than this. XOM still holding. I mean, this, by the way, this is essentially off the table now with this pattern. But XOM Again, weekly rotation zone with oil strengthening. I'm watching now for the continued breakout play above this two top pattern at this point. Why is this a triple? Because this big a pullback and then this push up makes it a triple. I'm watching for the breakout play and then I'm targeting 96.32 on XOM. John, bedtime. Okay. No one believes it. I think we're due for a circuit breaker sometime soon. We may very well get it. We'll get some warning signs again before that happens. We'll start seeing, unless something a nuke goes off somewhere in the world, God forbid, we'll get some warning signs with the price action. I have nothing to be bullish about. Even a rally is just more opportunity for me to load shorts. I have reason to go long until Fed backs off. I completely agree. These rallies, you could take advantage of them on short terms, and then they're great for reloading short positions. You actually should love these because you actually get to reload at much better prices. You get to make profits and unwind your shorts on the way down and then reload when you get the stupid bounces. Abraham meant lights out, LOL. Will you do Ethereum? Yeah. Sorry, I'm running. I got to get back out to finish this mulch too. Ethereum, again, we're getting the counter. Ethereum, we've had the major breakdown play, spiking through the harmonics. At this point, key areas I'm watching for is if it bounces to about 24.16 to about 25. Watching for another rollover play. If it does get a little stronger than that, your 50% from this decline is about 26.41 with the rolling over rotation zone. So you have a lot of bearish now stuff to get through on Ethereum, even with this little bounce. On the shorter term basis, we just have these spike lows. There are not great reversal patterns. If you're watching for another breakdown on a thing, watch the 62.5 on a closing basis, about 1871, which is also this little support shelf right there. Pretty much the same thing with Bitcoin too. Just I'll cover it because people might watch this on replay. Look, I mean, this is massive carnage. Again, I'm expecting easily 20K in this, but it's so correlated with the markets now, we could see a continued pop up, but all this is now resistance. Even back to 35,000 is major resistance. And just put up your harmonics. Oops. Because first area I'd be watching before that is about 31,760. Then I'd be targeting about 33,950. All right. With that, I'm going to call it a day. Enjoy the weekend. If not seeing you on Sunday, happy birthday and enjoy. Hopefully you'll be here on Sunday. I will definitely be doing a live stream on Sunday afternoon. No birthday's going to get in the way of the live stream. Did you catch ASNS today? It didn't run. It dropped from the pre-IPO price. No, I did not. I did not look at that. Well, that was... Whew. That's a drop and a half. Huh. Wow. I again, didn't look at that at all. Thoughts on Fiverr? All right, this is the last. These are the last two. Fiverr out of oversold condition. This is just another bounce play, a target on a continued. You have a gap play to 40.87 based off this little down move. The next target beyond there would be about 44, then 48. Those would be my two upside targets, and then I'd be watching for another rollover play. Why? You have against the rotation zone, Fiverr again, no PE. You have tightening money conditions, very oversold, but still no PE. And even if you got a rally beyond there, if you wanted to try to play for a longer term area, would just be the rotation zone. So if you closed above that 62.5, it would target the 87.5, 54, 60 area with the declining weekly rotation zone. There's your upside for that, and your downside now, based off this last push lower. Next rollover play would be 22.27 and 15.51. TTD. You did have, let's see how that looked. See, that's technically this. I know most people won't spot it because the double peak is exactly there with that little push in the middle, but you can still trade it that way because I've tested those out. They're slightly lower probability, but essentially, so TDD, you already hit the 50.61. Next targets are about 52.50, 52.48, then 54.34, and you do have a slight gap just above that to 55.15. So in a continued push, that would be my targets I'd use. You're into the rotation zone. You have a major breakdown zone, especially at the second target, which you're closing in on. And then you have this gap fill up here right at the top of the daily rotation zone. So again, I would not get too overexcited with this. At least they have a P to E of 223. If you did get a continued rally beyond that, which is very possible in these markets, the next area would be 57.52, and then the major line in the sand would be 62.29. So there's all your upsides. You can see how it reacted with those downside harmonics with the nice reversal here, right? With that, what probably a lot of people didn't spot as a double. So the next push lower, the next major targets, I'd be keying off of $30. And this will roll over again. All right. There we go. Had a nice little, what was that? Close to 45 minutes on a Friday afternoon. I'm going to get back to getting the rest of my yard work done. Again, thank you for being here. Thanks for the super chats. Shout out back to Lauren and Josh for those super chats. I will be here. Watch for the sector overview. I will record sometime this weekend before the live stream and get that up. And then we have the live stream 3 p.m. Central Time on Sunday, May 15th, my birthday. Yay! Talk to everyone then. Have a great day. Have a great weekend. Step away from the computer and forget about the markets for a bit. Talk to everyone then. Bye for now.